Man, I'm super excited about today. I have Gordon Scott, CMT Association, the former managing director of, and a friend and now co-founder of MyEdgeFinder.com. Folks, please welcome to the show, Gordon Scott. How are you, man?
I'm well. Thanks, Steve, for having me around here today.
And I can see people coming in already, and people want to know a little bit about you. Gordon, tell me a little bit about yourself, what you're doing now, and I'm gonna get out of your hair and you can talk about your own products and things.
Okay, thanks. I am a little, uh, well, okay, let me just say it this way. I might be one of the more influential people in technical analysis that you've never heard of. I've operated a lot behind the scenes. Years and years ago, I was a coach and then later the content director for Invest Tools. Invest Tools bought merged with Thinkorswim. TD Ameritrade bought the merged group, and I was the content director through all of that period. I was in charge of the education and helping figure out how uh, you know the guys Tom Sosnov and Scott Sheridan and all the trader types. And in those days, it was also Don Kaufman would actually take all their stuff, which was mostly selling options, and reconcile it with the Invest Tools TD Ameritrade platform, which at that time was mostly buying options. And so that was a big job. And shortly after that, I got tapped to be the managing director of the CMT program, which was the official FINRA recognized designation for technical analysis. I was in charge of the tests, the questions, the writing of the new questions, the giving of the test, the uh, collection and curation of the curriculum. Wiley came along during that period of time and said, "Hey, let's publish it." And so I worked with Wiley to get it into specific books, and I had to do all sorts of research. 200 books or more reading through to figure out what goes in, what comes out of the curriculum. After about 5 years there, I worked with Investopedia as the head of education. They had a little stint where they wanted to try and create online courses. They had me help out with that. And nowadays, I just trade and consult with friends and people who want to learn how to trade better, coach individually, and so forth. But the most exciting thing that has happened for me in the past 3 years is that a long friend and neighbor, genius programmer, came up to me and said, "Gordon, can you take a look at this project I'm working on?" He wanted to develop a way to come up with stock market trading systems, and not just stock market, if possible, forex, futures, anything, right? And so I started working with him, and he's fantastic at programming, but he didn't know a lot about markets. And so that's why, of course, he came to me. After about a year, he decided, okay, we need to have you fully on board. I want to be a partner. And so the two of us have now been going forward as co-partners in this tool, which is found on the website myedgefinder.com. Now, MyEdgeFinder is, this EdgeFinder software is really an interesting idea. He came to me with the experience he'd had, where he had read hundreds of technical analysis books, just like I had. But he didn't know what he was looking at. As he was reading it, he noticed something, though. He said, a lot of these guys, they just, they pick their set of indicators that they like, and they tell you, hey, trade with these, it'll work. It worked for me, it'll work for you. And what I couldn't figure out is, why did they choose, the 79 period moving average, or the 21-day CCI indicator, or something else? Like, well, they were full of all of these time periods and look back periods, which they never specifically justified. They just sort of assumed these are good, follow me with this. He referred to these as magic numbers. And he says, I started looking out for magic numbers. And it wasn't just numbers, could be any rule, any idea that was just sort of assumed by the developer that, oh, this is good. He says, I'm not an expert. How would I know that any of this was good? And so he got to thinking and learned about something called genetic algorithms. Genetic algorithms are let me just see if I can share my screen and share some slides here. So genetic algorithms, they do this thing where if you have so many possibilities, then they're going to look for a way to sort of evolve, right? In other words, suppose you had so many different potential magic numbers, rules for trading, that you really couldn't even count them all. You couldn't count them in your lifetime. That is, if you spent 1 second evaluating this one's good or not good, right? There are so many, an entire lifetime of that, being awake, never sleeping, never eating, would still not get you halfway through. So you can't even do a binary sort, certainly not manually. But even if you take that down to 1 nanosecond, you still can't do it. The number is so big. You've heard of a Google. Well, this is larger than a Google. It's like 10 to the 800 possibilities. So he came up with the idea that I've got so many possible ways to trade. I've got to find something that's good enough. How can I do that? Well, the genetic algorithms method is we're going to take a random starting point, and then we're going to just evolve, survival of the fittest, get better and better until we find one that's good enough. And so, like all of the possible trading rules that you could have, if you sort of look at them both in sample and then take some data for out of sample too, then how would you know whether any of them are any good? If you sort of think of all of the possibilities as this 100-mile grid divided into 1-inch segments, it's like huge plane of data. And you said, what I want is the stuff that's up high on the peaks. The stuff that's down low, I don't want to touch any of that. How would I be able to figure out what's the stuff on top when I can't even do binary sort? Well, the answer is if you sort of take the idea that I'm going to take a trading solution, I'm going to put it someplace randomly, and it's going to kind of wander around on the grid, and it's going to meet up with others, and the ones it beats, okay, that's what's left. And then so you take these things, and if one of them ends up in a high place, that's the one you focus in on, right? That's the idea here, is that you somehow say, I didn't have to sort all of them. I just sort of had to watch which are the ones that move up into the rarefied data I'm interested in. And then if I can get some trading signals on those particular trading solutions, here's the statistics, right? This just gives me the statistics of the solution that looked good. And what we found is that if we compare what randomness dictates should happen to what actually happens, the difference between the two. Well, for example, if we have a system that buys a $50 stock and puts a $45 stop loss and a $55 target, $5 up, $5 down, 50% could win or could lose, right? So if the baseline, if randomness says you should win that 50% of the time, this thing's going to say you should win this. I've got a solution here, and you should win this 60% of the time. Well, then that's a 10% edge. This system right here, as you can see, has a 9% edge. We also found that these solutions are really specific to individual stock symbols, right? So if you have a solution that works well on SPY, it doesn't necessarily work the same on ExxonMobil, or we even tested it on Euro USD and USD JPY. And with this, we were able to find all kinds of different trading solutions, very complex trading solutions. And we said, we can even divide them up into breakouts versus reversals or whatever. 4 different, I think we have 5 different types now. But we just wanted to know breakouts versus reversals. Could we use this system to give us data, tell us which is better? And we found that breakouts beat reversals sometimes, but reversals beat breakouts when you're trading on the Euro USD. And if you think about it, that's kind of expected because Euro USD has just been flat for years. And so reversals do better there. But on the USD JPY, where at least over the past several years, you've had more of a trending market, then breakouts do better than reversals. So we were able to get this data, just this excellent data from this EdgeFinder stuff. And to give you a kind of a better sense of what this is, let me just don't save. Let me just play this quick video we made for you here that kind of explains it. Let's see, Steve, if you could play that video file, that'd be great.
Hard-working, super smart assistant, and you could send them off to search through billions of trading strategies to find the ones that actually work for the stocks you care about. And what if the assistant never complained, but just brought you robust trading solutions you could use within minutes of asking for them? That is exactly what EdgeFinder does. See, here's the problem. There are millions of possible ways to trade any stock. Different entry points, different exit strategies, different timing rules. You could spend years testing strategies one by one and never find a profitable approach. Most traders give up before they ever do. However, EdgeFinder can do it for you in minutes. Here's how it works. EdgeFinder uses a process of machine learning known as genetic algorithms. Think of it like evolution, but for trading strategies. You rapidly sort through trading strategies by comparing one solution against 100 others in each generation. But all of that is in the background. Here's how simple it is to use. Step 1. You pick a stock, ETF, crypto, or Forex pair you want to trade. Step 2. You select the Evolve button and EdgeFinder gets to work. It searches through billions of possible trading rules using up to 25 years of historical data to find a trading solution. Step 3. It identifies how well the solution compares to a simple buy and hold approach. Step 4. Next, it tests those strategies on fresh data to make sure they actually work. All of this happens automatically in just a few minutes, and EdgeFinder displays a solution for you to evaluate. Once you have looked over the solution, if you like it, you can activate it with one click. Then the real magic happens. 4 hours after the market closes each day, EdgeFinder will check to see if the next day would be good for a trade. If so, you'll get a trading alert. Each alert tells you exactly what to do by showing you the entry price, the order type, your stop loss exit, and your profit target. Now here's what's important to understand. EdgeFinder is a research tool that finds unique strategies built on patterns so deep that most traders couldn't recognize them by looking at a chart. The number of possible working solutions is astronomically large. EdgeFinder is the trading research assistant that can test more strategies in minutes than you could test in years. It also reviews your solutions daily and sends you timely alerts. Subscribe to myedgefinder.com and stop.
Okay, that hopefully ended well for you. Let's see. I want to show my screen here again and just point out, this sounds good, right? You get trade signals. I have several collections of trade signals for today. This sounds good, but probably the most important question is, does it actually work? Well, I have been using these solutions now for a year to specifically trade on a collection of about 30 stocks, large cap stocks that are high liquidity, and they have a high volume of options being traded every day. So you could trade these either with shares or with options. The model portfolio for 2025, there are 4 portfolios. One is something I call Wolf because it is designed to take small, consistent winners, and the other is the Jaguar, which is meant to try to take bigger winners compared to the risk you're taking. And so the fun part about this is that we have both shares only and options only portfolios. So we have total of 4 portfolios. The first of them here ended up with 20.5% return for last year, which, beating the S&P 500. The options was portfolio was 18.8, just a little bit more than the S&P 500. The Jaguar, however, was 46.5% return, and that was shares only. The options were 41%. So we had a fantastic year that way. And in addition to this, I wanted to make sure that it wasn't just, hey, it's all the big stocks, right? I put together a group of small cap stocks, and I only started in the 4th quarter, but the October starting balance here of this model portfolio, it increased by 14% in just 3 months. And we had just small cap stocks, and as you can see, they're just taking little bits out of these. It was an amazing experience to watch it happen. And right now, if you look at it, where are we today? I have also a Mag 7 trading, solutions for the Mag 7 stocks. And so here's one. This is today's, where it says sell short on Amazon. So they can go long or short. In this case, it's a solution built to trade Amazon. It wins only 45% of the time, but on average, its winners are usually about double the size of its losers. So, you would only expect to win this thing about 33% of the time, but we end up winning it 45% of the time. So it's pretty good. Well, not all of them are set up exactly that way, but this one is interesting because it's saying anything above $238 on Amazon is a short. So just to give you an idea what that looks like, here's 238. Amazon's probably not going to get up there today, but if it did, you'd want to make an entry, give yourself about a $5, $5.83, and then a $5 target, which would be about right there. So that's the trade that EdgeFinder is telling you has a statistical edge. As I say, it's unless something crazy happens, we're probably not going to get in that trade today. And some of these trades, they don't fill. But most of the trades signals do fill. And as you can see, the results we've been getting are quite good over the past year. And so I'm very enthused about it. We've just added seasonality as part of the algorithms that it searches for.
And this is so exciting, Gordon. I mean, my Edge Finder. You're the former managing director of CMT Association, and for those of you who don't know, that all those squiggly lines on your charts, folks. I mean, these are the guys who actually built them and know the algos behind it. They are the teams behind it, and Gordon has done this. Now, Gordon, does this My Edge Finder, does it work for everything, like stocks, cryptos, options, and you just plug in whatever you want and it just works?
It's whatever we have a data feed for, which right now is stocks, Forex, and crypto. We don't have options or futures data feeds. So what we do is if you have a stock signal, then we translate that to options and say, okay, here, just buy first one out of the money, go out 45 days, and take that swing trade using that option.
And
So
the best part about Gordon, about you being a big friend of Quasar Markets, we've got all that data for you, man. So we can help you out there. But one of the cool things I like about Gordon, and Gordon, you'll have to tell us a little bit about yourself that we don't know. We know all the algo stuff. You live out in Utah. Tell us something that we don't know about yourself.
okay, well, let's see. When I was just graduated from high school, me and several buddies, we had a habit of jumping off 40-foot bridges. And we went around to all of the areas of Northern California that we could find. Golden Gate was too high. We did not jump off that bridge. But there were a lot of smaller bridges we jumped off. And, that just sounds like kind of wild and crazy stuff. But what I realized and learned from that experience right off the bat was how important risk management is. See, the first time I went, these guys were like, "Yeah, we're going to jump off a bridge." I'm like, "Wait a minute. I think I was warned about this. If your friend said, let's jump off a bridge, would you do it?" And so I thought, how on earth am I going to? So I started asking questions. Well, like, have you guys done it before? Yes. What are the risks? Are there rocks in the water? I mean, you know the place we're going? Yeah, we scouted that. We've done it. We jumped. Last weekend we did it. And I said, okay, well, is there any kind of danger? You hurt yourself? They said, yeah, there's danger, but we mitigate it. You don't dive, you jump, and it's best if you wear tennis shoes or some kind of shoes so your feet don't, slap the water bad. And all these little things that they had worked out together were nice risk management situations. And over the years, I thought about that and realized stock trading might seem kind of crazy to some people, or Forex trading, high frequency trading might seem kind of crazy to some people. But if you understand what you're doing, if you know the territory, if you have people that have experience in guiding you along the way, and if you got some shoes on, some good risk management rules, it's just a lot of fun.
I love that. We always had to put our real life experiences and how we actually trade. And everybody trades differently, and I appreciate that. All right, Gordon. Now that I get to know you a little bit, we will see you right back here next week in the same bad time, same bad channel. And I'm looking forward to showing us what stocks you found here on My Edge Finder.
Okay, we'll do it.
All right, for those of you out there, thanks for watching. And once again, the button's right there. Click that button, myedgefinder.com. Click on it, sign up, and see what Gordon's talking about and why he was managing director of the CMT Association. All right, until next time, we'll see you there.